The high end is what
Yeah.
people want to see. I put up a poll in my chat on the members for Q2, and it's 650, 640, 630, 600, and 650 has over half of the votes.
Yeah, but just because
Yeah, of course.
The echo chamber is what people want. Okay,
So you're just trying to
Yeah.
feed them exactly what they want. I
You
don't
remember,
know.
you remember when Roy was like $10? Like people were talking about that for like 2 weeks afterwards.
It's true.
That's how we got all the Chuck Norris jokes. It's just because he said $11 price target, and then people are like, you know.
And he was like under the rest of us for most of the predictions, and then he came out at the end and he's like $11.
I mean, we know like the stock market can do anything with the price. And so even if things are great or not great, like it can do anything. So that part's just for fun.
Chris was able to join us as some schedules lined up very well for us. So yeah, we're going to be going around and doing some earnings. Tevis, I don't think has had enough time to put together as much. So I think he might have some members, revenue and stuff. I said 630,000 members.
I think it'll be a little bit less than what we saw in quarter 1. I think we'll see right around 600,000. So somewhere just in the middle of quarter 4 and quarter 1. We have some benefits from the NBA partnership. I know we got a little bit of that in quarter 1, but one of the big pulls for SoFi has been the interest rates, which I think the longer we're at this higher for longer level, the interest rate enticement, it loses some steam just because everybody that's chased that already has largely done it. There's still some more, but so 600,000, I think we'll see acceleration next quarter, but 600K is where I'm at.
Which number are we looking for? Are we looking for the number that SoFi is deriving, or the one of actual member increases going forward?
Yeah,
The net new members.
Roy, your net new member count is what? Sorry?
I'd have to do the math. So these are just straight up new members. I know that we're going to lose some just because inactivity. They had new penalties that they instituted on inactive accounts, and and I know that there's some that are leaving for other platforms. Just from Invest, it looks like. So I guess maybe we might be at like 550 actually.
All right, so I actually think we're going to get slightly more in the second quarter. I think that the NBA will be a bit of a tailwind, especially because the Celtics did so well, and Jason Tatum is like the, one of the spokespeople for SoFi. So I went with 640,000, and that's new members. Actually, when we talk about the net new members, Q1 was the first time that they ever subtracted out those members.
Mhm.
And so basically every member that they would have considered inactive would have come off in that quarter for like the last years, right? So I actually don't think that the net number will be very much. I think it'll maybe be a couple thousand. I could be wrong on that, right?
Okay.
But I actually don't think there will be a big difference between net new members and new members, just based on 32,000 for years and years of inactivity, right? That they were scrubbing off. I don't think it'll be that big of a difference. And I'm really interested, I guess, just because Roy mentioned the Invest product, I'm really interested to see what actually happens with it. I went back and listened to the Q1 earnings, and they were actually pretty positive on things. They talked about how like AUM was going up and how they're seeing a lot of inflows for their alternative investment stuff. So it's really weird because then when you look at the actual numbers for the last couple of quarters, they haven't been that good as far as member adds. So I'm just curious to see how that actually translates into the numbers.
I'm not going to keep doing the net new accounts and everything, but each individual quarter for SoFi Invest, this is why this quarter is so interesting. If you guys don't pay as close of attention, every quarter we've added some level of new accounts, and actually that was starting to re-accelerate as markets were starting to recover in 2023 until we got rid of crypto. And then in Q1, I actually don't know what is going on here. It continued to decrease, and I just wonder where we're going to go. So my prediction for this quarter was simply 0, which was sort of a bow out from making any prediction at all because I have no idea what direction it's going to go. Tevis, members.
I'll take the top end of the range. I'll go 650 just for the sake of the top end. I think one other thing to keep in mind is we didn't have a full season for the NBA partnership. We had the tail end of it. We also had a little bit of golf with regards to Wyndham Clark, and we also had a whole bunch of Copa America games at SoFi Stadium. You had like Brazil, Costa Rica, you had Mexico, Venezuela, and that's a really big tournament. It's like equivalent to the World Cup. The lack of news makes me really hesitant, but I also think that like if you just linearly extrapolate 44% growth year over year for the last 2 quarters, generally speaking, there is some seasonality, it seems, over the past couple of years. Q2 is stronger than Q1. I feel comfortable take the top end of the range.
You mean
just
for member growth, it's been stronger in Q2? So we
Yeah.
have 550, 630, 640, and 650.
Tevis is just doing what's on the SoFi chart. That's 600K. So I'm in the 600s as well.
Some of us didn't do product counts. I believe that their products per user may continue to drop just slightly, but bringing on 913,000 new products.
So my total products was going to be 12.63.
So you have more members than me and less products.
Because I'm assuming that we're going down to that the products per member is going to deteriorate a little bit just because it's been on a downward sloping curve. I think it'll probably just continue just because we're bringing on more members every single quarter.
The rate continues to decrease as we have larger and larger influx of new members, just because it takes time for the flywheel effect. And there's some products that they're not trying to push right now. If they were accelerating lending, then yeah, we would see, maybe that 1.5 continue, but right now it'll just be a little softer quarter.
Tevis, products per member. Are you thinking this is going to go up or down?
I took the top end of the members range. I'll take the top end of the product range. I'll go, 650 multiplied by 1.465.
1.465.
50 multiplied by 1.465. 952,000.
Got you. Hey, I mean, we've had quarters before where we've broken 1 million new products. It's not out. Do we want to do technology account predictions? Did you guys do any of those?
I didn't do one. I could.
I'm
We actually
saying
saw a big jump last quarter.
7 million. That's what I'm saying.
Just because you're saying 7, I'm going to say 10. I haven't even seen the chart.
Okay. You're going to take the high end, eh?
Yeah, why not?
I'll go with 7.5 million more.
7.5 million. Even higher. What's that? That must be like a 25% year over year change or something like that.
If they're assuming 20% year over year growth for the tech platform in general, it was a little higher than that in Q1 if you're looking at year over year. Do you guys think that like each sequential quarter will be 20%? Or do you think it'll be slower in Q2 and then ramp up in Q3 and Q4?
I have it slowing. The 20% was over a week comp, and of course we have a pretty weak comp for quarter 2 as well, but I had 18%. I think that it'll probably accelerate, but also have harder comps in quarter 3 and quarter 4. But yeah, I wouldn't expect 20% this quarter.
I mean, if it doesn't get 20% this quarter, it means that with those harder comps in Q3 and Q4, it's going to have to accelerate even more, right?
Yeah, and I think that's what will happen, that it'll accelerate into harder comps. So we might see 18%, which is not great this quarter, but if we see the 18% in quarter 3 and quarter 4, that's great, actually. So
working in B2B SaaS, you have to really work with the business cycles that companies have for allocating spend and understand the reality is that Q2, Q3 is kind of slower. And then Q4 is when they have leftover budget, and that's when they buy software, or Q1 when they unlock new budget for the year. Like there is definitely some seasonality involved with software purchases. So that could also play a part.
I do think that this will be the first year or the first quarter that we get over 100 million in revenue for the tech platform, though. That'll probably stand out as something, right, that they'll highlight too. So
yeah, I put 7 million for that. Chris, you said 7.5 million. Tevis, did I catch any numbers? Or
Tevis said 10 million.
I'm playing the top end, man. So if it's like you put 7.5 and it comes in at like 8.3.
Oh, you just want to be closest to the actual.
Yeah. You never played The Price is Right?
I just looked at the overall growth of 18% for the tech platform, so a little bit of slowdown. I don't know what that translates to. It'd be like 6.9, 6.8.
So,
well, the B2C businesses you can forecast with information that's out there, but the B2B side of the business is like a complete shot in the dark because they don't provide any information on that, and nor like other than the Galileo press releases of what they're signing, like, oh, we have a deal with Chipotle, oh, we have a deal with so and so. Like you can't really deduce numbers from that.
do we want to go on to revenue? We can decide, or you guys can decide on if you want to break it down on a per segment basis. So I put $572.5 million.
I have 570, so a little bit under you, but not by much.
Dude, I'm a bull today.
I have 588, so
Yeah, it's the exact same in terms of a breakdown. So I have 585. Yeah, I have a slight acceleration quarter over quarter. So
Yeah.
I actually have lending dropping by about 25 million quarter over quarter, which I think is pretty conservative.
You
So
know
going
what?
from
You
like
probably have corporate revenue doing like 0 or even positive, don't you?
I have it doing like 2 million. And I'll cover that in a second, why I think
I
that.
did negative.
I think that there's going to be a drawdown in lending, and they guided for that. I think that financial services has to go up by at least like 20 million, which would be about 170 million if they want to hit their 75% year over year targets that they talked about. I do think that financial services will accelerate even more in the back half of the year on an absolute basis, because they're going to be leaning into things like credit cards and spend and other things that right now they've kind of kept on the back burner. And then the technology platform I have increasing at about 18% year over year, which is like 103 or 104 million. And then I have about positive 2 million in corporate revenue. And the reason I have positive corporate revenue is because they talked about one of the reasons that they outperformed on corporate revenue. So it was that they were pulling, so all the money that they got from the senior convertible note deal that they were holding to pay off the 300 whatever it was $1 million in preferred shares, like 330 or whatever it was, that money they just had sitting in accounts generating interest for them. And so the preferred shares weren't actually retired until the end of May, like May 29th. And so for 2 months of this quarter, they would have had that $330 million just sitting, earning something like 5 to 5.5% interest on it. And
Right.
that'll drop to the corporate revenue line. And so for that reason, I think corporate revenue will be close to flat or slightly positive.
I just set my corporate revenue to 20 because that's what they've been soaring at. However, I saw you and Vadim talking about this. I think that technology revenue is going to accelerate. Like you said, it's going to break 100 million. Lending's going to slow down. I have it at 314 and some change. And then financial services, I have it at nearly $174 million. I'd like to know what you did for financial services.
I just looked at, so every other quarter previously, they were ramping almost consistently at $20 million every single quarter until last quarter. And last quarter, they only did 10 million. And I still don't know exactly why. Like, I've tried to break it down and I'm not sure. So I just assumed that they got back to kind of that steady run rate of about $20 million more quarter.
I only did like 23 million increase. So I'm only 3 or so million behind you. The reason why I had an acceleration was because of the amount of SoFi money users that increased. And if the large drop off of SoFi Invest members were inactive, then they were inactive before they got rid of them anyway. So it wasn't an impact on revenue. So I actually think you just got all these SoFi Plus members on. They're going to start to increase spend, bring on deposits, do all the great things that SoFi wants them to do. I think that we're going to start seeing a ramp in financial services revenue. That's just how I saw it.
Lending, I think that's going to be a sizable deceleration. So they raised guidance slightly on lending, but it's still 92 to 95% over the year, which indicates more slowdown is coming. Maybe that they reverse that in quarter three if there's rate cuts, who knows? But that's what really hurts this earnings. And a lot of people will be focused on that. It's their largest segment by far. So yeah, I'm looking at maybe a 92, 93% year over year comp. I think member growth accelerates in quarter three, especially. But also quarter four. And so based on that, a lot of those are going into the financial services right away.
I think it'll actually have to. Try modeling out 75% growth on financial services. Like, it's hard for me to get there without seeming extremely optimistic.
Yeah, and in the Q1 call, they said greater than 75%. They didn't even say 75% plus. They said greater than 75%, which was different, right? In Q4, they did say 75% plus. I think that there's something on the back burner. I assume it's credit cards, because they've talked about it multiple times, right? They've said, we're going to start scaling the back end. They expect that Invest will be the next one to go positive before credit card in terms of contribution margin. So they said, those combined businesses have an annual run rate loss of $100 million. But they said, we expect, Invest to become contribution profit neutral first and then credit card after that.
Did you guys have any expectations for EBITDA? I did 137.4 million.
I did 135, which is slightly lower. So last quarter they got 144. I think the guidance was it 115 to 125?
Okay.
I don't have it in front of me.
I don't remember.
Yeah, it was 115 to 125, their range.
Remember. Yeah, I had 135. I think that because you're going for mix shift, that's a little bit more lending to more financial services, and lending has a higher margin than financial services, that means that you'll get a little bit less EBITDA this quarter, even though I have revenue accelerating just slightly.
I have 130, so it's I'm expecting that they'll beat what they guided very slightly, but not by much.
I'll take the top end, 140. Well, I mean, I took the top end for revenue, right? So I was 588 for revenue, so it sort of makes sense.
And then Net income, I did nearly $26 million, 4.5% margin.
I have 25 million, and they will still have a dividend payment, I assume, for a portion of this. It won't be 10 million, but it would be something like, I don't know, 6.5 million, because like those preferred shares were still there for
I was going to
2/3
say,
of the
you're
quarter.
talking about the preferred shares.
Yeah, so that would come down for whatever the EPS is, but what they call net income would be 25 million.
Roy, Tevis, net income margin, what are we thinking? What was the guide for?
5 to 10. I
5
didn't.
to 10.
Yeah, it's pretty low. I didn't do net income. I just did EPS.
Same.
EPS?
I put 1.5 to 2.
I'm at 2, by the way, 2 cents. I think it'll be slightly under, but it rounds up. So
I'll do
Same here.
whatever the common shares divided by my 25.7 million is, which, yeah.
It's right around 2. We basically all did 2.
Okay. A bunch of people in the comments are saying that we are being extremely bearish on our earnings per share predictions.
I'm pretty sure all of us, maybe with the exception of Roy on a couple of these, but all of us are above what SoFi themselves is guiding for.
Well, Wall Street analyst estimates are 565 million on the revenue line, 120, I think it's like 123 million in EBITDA, and break even, so 0 cents of EPS.
Yeah.
So all of us are assuming double beats there.
But yeah,
I think-
no. And I guess like one thing related to the actual earnings, they always raise guidance. So we know that they're going to raise guidance, but do you guys think it's just going to be like a normal small raise, or do you think that they might raise guidance a little more aggressively?
Yeah, I think short-term guidance, the Q3 numbers are going to look amazing, in my opinion. I think that things are going to start looking very bullish, and I think that lending is going to return, and yeah, all that's going to look great.
If you go back and you listen to Q4 and you listen to Q1 and you listen to the Mizuho conference and whatever Noto's other thing in Q1 that he talked about, every single time that they said, hey, why aren't you lending out as much? And they kept saying there's all this volatility about rates. First they were 7, or first it was going to be higher for longer in November. Then by December we were saying 7 rate cuts. Now it's 1 to 2. Then it's going to be 3 to 4. And if you talk about, or if you go back to the CNBC interview, which was, just a couple of weeks ago, he said multiple times, he said, there's like a consensus for where rates are going coming into the market. That raises the potential that instead of pushing things off to 2025 to start reaccelerating lending and going maybe just slightly less conservative route, that in Q3 and in Q4 they might start accelerating a little faster than planned because of that clarity as far as the rates go. I think there's a potential. I don't know if they'll do it because they are still going to be conservative. They're always going to be conservative, right? Like that's kind of part of their DNA. I think more important than what happens in Q2 is what they talk about moving forward and their guidance for Q3 and the rest of the year. Wall Street already expects this quarter to kind of be a bit of a throwaway quarter, but Wall Street is also expecting really crappy growth from here forward, and not just from here forward in 2024, like where they're saying this is a transitional year. They're then saying that in 2025 and 2026, you're only going to be seeing mid to high teens growth, which is the opposite of what. So, I mean, management's guidance is we're going to reaccelerate growth in 2025 and 2026, and analysts all have it tailing off. I really think that we're hitting an inflection point for the company in a lot of different things, and one of them is going to be the fact that they're going to be way outperforming long tail analyst estimates relative to what they've been.
If they're guiding for 80 cents of EPS in 2026, when and how will they get there? What will kick off this 10x growth? This is a great question. You know what management has said? Them doing absolutely nothing. Them just operating the business as they are right now is expected to bring in somewhere between 55 and 80 cents. So that's discounting for new product launches or new segment launches like SMB or something like that. So
they even said it wouldn't include any new credit card offerings.
Yeah, so
which is crazy because then in the same sentence they said, by the way, we're planning on new credit card offerings in the second half of this year, but we're not building it into our long-term guidance.
You got to keep in mind that like financial services is almost doubling every year.
Not just doubling. Look at the margin. We were at a negative 90% margin there, like not too long ago, and then we got 2 quarters ago is at a 3% positive contribution margin. Now it's at a nearly 25% margin in 2 quarters, from 3% to 25.
Last quarter, they actually got more contribution margin growth than they got revenue growth. Like the margins were greater. There was like an extra 13 million in contribution margin and an extra $11 million in revenue. And part of that is because their customer acquisition cost and their marketing spend actually came down quarter over quarter, even though their number of new members came up. And I think a lot of that, I would bet that the vast majority of their sales and marketing goes towards financial services.
Plus, 2026 is a while away. If we don't have rate cuts by then, I don't know what happened, because that's, even though the stock is incredibly rate sensitive, the company itself benefits in a number of lines and new products that they've alluded to, but they've not launched yet just because they're waiting for a different macroeconomic environment. And so lending is not going to forever shrink. They'll be able to open, they have a lot more direct deposits coming, a lot more active users. And so they can open that up substantially. They have far less competition on the student loan front. Like, honestly, when they're wanting to open that up, looking at rates right now, especially for grad plus loans, are just absolutely ridiculous. So through 2026, they have, of course, the mortgage side from the Wyndham acquisition that they've not really done a lot with, just because they've scaled back lending. And it's a terrible time to be a mortgage lender, but that's not going to last forever. And so between that and then also the tech platform, I think that they get there fairly easily. Just they're so conservative. This is a company we know is going to be around. They know how to execute. Once they flip that switch for lending, it's going to be meaningful.
They're getting ready for a big influx in originations as rates come down. I know that's what you were implying.
Revenue. I meant revenue. Yeah. So it's very small still.
And they got that for pennies on the dollar. It was a very cheap acquisition.
Just as a little fun add-on question, just a yes, no. Do you think there's also going to be a press release with the earnings result? After they report earnings, I suspect a huge wave of news, Q3 essentially initiatives. I think they could be announcing something as early as that Tuesday, similar to how they've announced, BlackRock,
the
securitizations. On the day of earnings, they usually roll out a press release somewhere later in the day, and they have an opportunity to talk about that on the earnings call itself. I think, just like as a little, shotgun prediction, they could be announcing something as early as Tuesday, July 30th. I don't know what. Whether it's a new product line or a new partnership, like something to do with the business acceleration that we're expecting to see. A lot of us right now are trying to piece together, okay, where is that acceleration coming in the back half of the year? And they've dropped hints with regards to credit cards. They've dropped hints with regards to student loans. Like, they're prepping, and you can see that they're prepping. I think that we're going to see a big drop on earnings day because it gives them an opportunity to also talk about it on the call.
I could definitely see that happening. In the last couple of quarters, they've been talking a lot about credit cards. I think that it would be the perfect time to release some sort of new credit card and say on the earnings call, this is what we're doing on the back half of the year. We're going to be pushing this product. It's insanely high ROE.
If Noto and company and management was really wanted to come out hard this quarter and say that we've seen clarity in the macro, we're going to get back into lending in the back half. And so we're raising our guidance and we are coming out with X, Y, and Z new products. If you want to talk about a short squeeze potential, that's pretty much the only thing that they could do, because right now expectations are really low. And if they came out and said, we're raising guidance, we're reaccelerating on lending, instead of doing 92 to 95% of last year's revenue and lending, we're just going to be flat year over year. That ends up being like an extra $100 million in revenue for this year. And that's something they could easily just pull the trigger on if they think that the macro is right in order to do that. And then you do that and you say, we're also going to be rolling out this new product in the next 2 or 3 weeks. And now all of a sudden the sentiment completely changes, also because of the recent run up in the stock, right? This is like the best case scenario for how this earnings would transpire. And I'm not planning on it happening, but like that possibility is there.
I don't really think about price that often. So Roy, obviously you got to start us off. What is the price?
The price when the day closes on SoFi after they do earnings. I predicted famously 11 a couple of times ago. This time, 7.
You think it's lower than today?
I think it's lower than today.
It really depends on what happens between now, like what the price is going into earnings at close of market that day on Tuesday. Is that what we're doing?
Close the earnings day, yes.
$8.87.
No, that's exactly what I was going to say. Like, seriously, to the
Chris.
penny. All right, then we'll go 888 because
you took the high end.
What's the percentage gain to get there?
That would be 18% up, 18.5% up from today's closing price. Well, I assume 750. It's like 747. Call it 19% up total.
Okay, that's not as egregious as I thought it would be.
ETF went 889. So.
I'll say Price is Right. I'll do 886.
What the?
Tevis is definitely not
Good
getting
luck,
that one.
Tevis.
What makes this really tough is that we have a lot of time between now and then. It feels, at least to me, like the market might do a little bit of selling off here. And I could be wrong, but just what we saw on Friday. We've seen profit taking in some areas too, and SoFi's risen a lot recently. So it wouldn't surprise me if it gives some of that back and then we rise. As earnings comes back, we may see sixes again before earnings. Just it depends what macro is doing and if it's a risk on a risk off environment. Powell comments always. I mean, it just 2 weeks is.
Yeah, well, the next day is FOMC, right? That's what SoFi always does their earnings 1 or 2 days before FOMC, and
I hate
we're
it.
not breaking that trend. But actually, I think that there's a chance. We haven't done any macro talk on this today, but personally, I think that they probably should be cutting in July. They say they're data driven, but I think if they were data driven and they were looking at all the jobs numbers, they'd be cutting at the end of July. But I do think that they're going to jawbone and make it pretty clear that they're planning on cutting in September. And basically, that's the same thing as cutting itself with the way that markets price things in ahead of time. So there's actually a chance that like you go up on earnings day, and then the next day, instead of FOMC being a giant downer, it actually then boosts the stock even further.
The market has priced in 100% chance of a cut in September. So maybe that shifted off of today. I don't think it did. I think, we could see lower than right now with SoFi, but that we continue to rise throughout the year as the macro improves for SoFi. And I think that's exactly what's going to happen. So
it's now a 98% chance is what they're pricing it.
I think that if I am to make the sort of bets I'm making on members and revenue and EBITDA and net income, I don't think that it would derive such an unbelievable run up to $9. If my bets were much higher, like Tevis's, then obviously I could get myself to a much higher share price. But I don't believe there's going to be 10 million Galileo clients. So I'm also not going to believe that it's going to run past 9 or something, at least in the short term.
Yeah, I think the two things that matter are one that we didn't talk about, but charge-offs, whether or not that's high enough that it scares people, and the guidance. I think that those, like almost the entirety of the post-earnings stock price movement isn't going to be very much on how much they beat or if they beat the Q2 numbers. I think it's going to mostly move off of guidance and NCOs. Because the bears will come down and say that the net charge-offs are too high and that SoFi has been lying to us all around, and their fair value marks are too high because their management is full of BS and whatever, your standard bear argument for SoFi, which is that everybody's lying to them. Or management is lying to them, and that they're going to push that narrative no matter what, because NCOs are going to be high. And I explained why in one of my articles. If you want to go back, you can talk. It's the one why the bears are wrong that I wrote a couple weeks ago. But the point is that that's where they're going to push.
All right, ladies and gentlemen, that is the SoFi Weekly this week. We have one more episode next weekend, and then Monday morning, the 30th of July. We have earnings. Chris, I hope you're there. If you're not, that's perfectly fine.
I'll be there for earnings in the morning. Mornings are easier.
The 30th of July is a Tuesday, by the way.
Yep, Tuesday.
Okay. The Tuesday morning, July 30th. Usually it's a Monday, is it not? Usually?
The last quarter was
It is.
Monday.
This is the first time it's been on a Tuesday.
Okay.
In
so
like 3 or 4 quarters.
Just go off the numbers, ladies and gentlemen. Roy, take us away.
Later.